If you own a business and have kids, there's a legal way to move money out of your high tax bracket, pay 0 federal taxes on it, and start building wealth for your children tax-free. This isn't a loophole, and this is not really considered being aggressive. Most parents just do not know about this strategy. It's written directly in the tax code, and we're gonna talk about step-by-step exactly how you could start doing this to build wealth for your children. It's important to keep in mind, the tax code rewards people who pay wages and hires employees. So your business is allowed to deduct wages, and your children are allowed to earn income. So instead of paying all that income at a higher tax bracket for yourself, we're gonna shift that income onto your children, pay 0 federal taxes on it, and use that income to grow wealth. This is not cheating, this is tax planning. I encourage you to use strategies like this in order to grow your family's generational wealth. So can you really hire your kids? Are you skeptical about it? The IRS only cares about these 3 things when you're hiring somebody. First, the work must be real. Second, the pay must be reasonable pay. And third, the money must actually be paid to that person. If these 3 things are true when you're paying your kid, you are in the clear. Let's speed run some examples of legit work your kid could do for you to get paid. 1, they could help with social media content. 2, filing and scanning. 3, organizing receipts. 4, updating your website and helping with your online presence. 5, modeling for ads and modeling in your social media. 6, office cleaning. 7, admin or data entry. If you'd pay anyone else to do it, you could pay your kid to do it. Keep in mind, the work must be real. That was one of the points, right? So if you have a 2-year-old baby, you're not gonna say that you're paying your 2-year-old baby to do admin work or office cleaning. On the contrary, your 2-year-old baby might model for you in your social media content or things of that nature. Well, so how much can you actually pay them tax-free? Is this strategy worth doing? For 2026, the standard deduction for a single filer is $16,100. That means your child could earn $16,100, pay 0 income taxes on it, and your business is going to deduct $16,100 from its income. So let's say your business is in the 37% tax bracket. That means you're paying roughly $6,000 on that $16,000 of income. So not only are you saving $6,000 in taxes, so this is money you were going to earn anyway, we're just routing that income in a smarter way. So does your child actually have to file a tax return? This is where most people get confused. Let's clarify, there is no age limit for filing a tax return. Filing depends on income, not on age. So if your child is earning $16,100 and they're below that threshold, technically they do not need to file a tax return, but it's always smart to file one. The reason it's beneficial to file the return with the IRS is because you're gonna be creating a W-2 for your child, you're gonna have a paper trail for the expenses on your business, and it's easier to fund the Roth IRA when you have something showing where the income is coming for your child. Now we're going to talk about the magic sauce of compounding this income into a Roth IRA. This is where it becomes very, very powerful. So because your child is now earning wages, they're able to fund a retirement account called a Roth IRA. For 2026, the Roth IRA contribution limit is $7,500. So not only did they not pay any taxes on the $16,000, they're now contributing $7,500 to a Roth IRA where investing will compound tax-free for years to come. Let's give an example of how powerful this is. If you contribute $7,500 at the age of 10, you invested in a broad index fund. Let it compound until the age of 65. This money could grow tax-free to $1.6 million of net worth by the time they're 65 years old. So no income tax, no capital gains tax, and no distribution taxes. This is quite literally how rich and wealthy families are building generational wealth. This is not a secret. It just separates people that have this information and utilize these strategies versus people who don't know about this and don't utilize these strategies. Make sure to avoid these mistakes when implementing the strategy. Do not make up fake jobs. Do not overpay wages. Do not skip payroll filings. Do not pay cash. And don't forget to file W-2s. Do make sure you're well documenting everything because it is a legit strategy and you want to do it the right way. So who does this work best for? This is ideal if A, you own your own business. B, you're making $150,000 or more in net income. C, you have kids under the age of 18 years old. And D, you want tax savings while building long-term wealth for your children. If that describes you, this is a low-hanging fruit strategy you should implement this year, 2026, and moving forward. So if your CPA has never explained this to you, this is probably because they're not aggressive enough or you're not having enough back and forth conversations with them. This requires proactive planning, and these are the types of strategies that you should be implementing to get to the next level. If you have any questions about setting this up the right way, drop comments below. I'm going to answer you directly from me. And remember, we're going to build brick by brick, one step at a time through this channel to build generational wealth and financial freedom for you and your family. So guys, if this video helped you, please like, subscribe, join me for future videos, and I appreciate all the love and support. I'm gonna catch you guys in the next video. Let's continue to build wealth.